we're moving into an age where, number one, things have to be tailored to the individual. This whole one size fits all, I think, is gone. And I think now we have the technology means, given the data that we have now on individuals, the funds, the portfolios, applying intelligence for the very first time. We have access to intelligence in a way that we've never had.
Samir, thank you so much for being on Live Long and Prosper. It's really wonderful to have you on, and looking forward to this conversation.
It's great to be on, and thanks for having me.
So, Samir, do you want to start by maybe telling us a little bit about Allocate, your vision, and what sort of Allocate is trying to do? We're big fans of what you guys are doing.
Yeah, no, I appreciate that, and I'm glad you asked this question because a lot of times, when you're in the business, you kind of assume everyone understands what your business does, and then people start spinning the narrative of, oh, you're this, and you're fund of funds, you're an investment arm for a bank, or you're a venture capital, investment provider, and we're actually none of those things. So maybe to give a little bit of context, I spent my entire career working in the private markets, primarily in Silicon Valley, working with venture funds, startup companies. And over the last decade, one of the things that I've seen is just this increased inclination for people wanting to invest in things that are other than stocks and bonds. The problem with that is, unlike the public markets, it's very open. Private markets are opaque. They're growing in size, which is actually growing in complexity. And there's a whole host of barriers that make it very difficult for investors to be successful in investing in private assets. And if you look back at the last 25 years, private assets or private markets have actually outperformed and provide a necessary level of diversification. So, in my last role, I was at a bank called First Republic, which now become a little bit famous because it went under, unfortunately, in 2023, but was a great organization that had three legs of the stool: private banking, private wealth management, and then commercial banking. And within the wealth management world, I saw, our clients actually getting younger. So people now in the 30s and 40s controlling a ton of wealth, both because of generational wealth transfer, but wealth creation because they were starting businesses. And the thing that I kept hearing where it was, I really want to build a really great portfolio that is diversified across asset classes, but I don't know where to start when it comes to private markets. And what I saw was really kind of three fundamental things that were lacking. So number one was the ability to access, opportunities that were the highest, you kind of yielding, or at least had the potential to be highest yielding. And in private markets, the dispersion of returns is so lean toward the top decile and top quartile, especially things like venture capital. The second was things were still pretty manual in terms of signing up and monitoring these investments. PDFs, logging into a ton of different portals, very little visibility of what's happening, and very difficult to be able to evaluate opportunities. And then the third thing was really just the lack of liquidity. So I invest in something, and now I got to wait 7 to 10 years to be able to generate liquidity. And our view was that with sort of this, continued push of people that are not institutions wanting to invest, we have to reduce those barriers with technology at its core. So Allocate, if you think about it, is building private market infrastructure for the private wealth advisors to be able to offer clients a way to responsibly participate in private markets. That's through a combination of originations. So we have a full investment team that all they do is go out and meet managers, evaluate managers, and take an institutional lens to make sure that the funds that are brought, or co-investments that are brought to the platform, have gone through a strict level of diligence. The second is making the transaction easy. So 2 clicks to sign up, clear visibility of what's happening in your portfolio at any given time. And the third thing, which we haven't launched yet, is the ability to generate liquidity when you need it. Unlike a big institution, people like yourself and me, we may buy a house, we may have family needs, may need to generate liquidity when I need it. And so being able to solve for these things, to be able to bridge between the wealth channel and the private markets, is really what we're building at Allocate.
It's very exciting, and I'm really glad you're doing this because for people like Arta, we're trying to democratize wealth management. I mean, what you're building is such critically important. I would say not just infrastructure, but component of like that offering. And with private markets growing, I think it's going to be huge. So, Samir, you were at First Republic, doing really well. Allocate is a fantastic vision. How do you convince a whole bunch of? I mean, you've got an excellent team. How do you get the team to jump in? How do you build that together?
So we've been really lucky in being able to, get some interesting people. So we at the very beginning, and so number one, why start a business after being at, in the corporate environment for 23 years. I should mention that before First Republic, I was at Silicon Valley Bank for 13 years. So 99 to 2021, working at big organizations, great jobs, great organizations, did well, was able to build a business within First Republic. And you have to be a little bit of crazy to start a company, as you know. It doesn't really make logical sense, economic sense, time sense. None of it makes sense, especially when you get to the age that I am, which is I'll be 50 next year. So why even do it at this point?
Samir, you and I are exactly the same age, and exactly the story. We've been just walking different paths.
Right. But my dad was an entrepreneur. So my dad, immigrated from India. He was an entrepreneur. Decided, he got a civil engineering degree. A few years later, decided he wanted to be a commercial real estate entrepreneur. No one gave him a chance. He had this unreasonable mindset of creating things, and so that always was something I adopted. And ultimately, that's why I joined Silicon Valley Bank, because it was the opportunity to work with entrepreneurs in a different, in not real estate, but within technology. So I've always been bitten by the entrepreneur bug. So it was something that I could not do. It was something I had to do in my life, or I would not be fulfilled. How I got people to come along. So at First Republic, fortunately, we had made an acquisition of a fintech called Gratify. Within First Republic walls, I was actually working on a project that was really a technology project to make it easier for GPs and LPs to work together. Now, very difficult to build technology products within a big organization. At the end of 2020, realized like I need to go out and do this, and I saw a bigger vision. And fortunately, the people that I'd worked with were also looking for the same thing. They had the entrepreneurial bug. They wanted to build really interesting things. And so we were able to get the core group of people. But I think with any business, you really have to have a purpose of what does this look like if you're successful? And our view is that wealth creation should not be insulated to a small group of people. My dad was given a shot that he had no business getting a shot from a guy that gave him a shot to be a partner at a real estate firm when my dad had no experience. Now, because my dad was successful, because he came from a different sort of lens in terms of how he looked at the world, he was able to create a great life for, my mom, him, myself, and really create the foundation. So I think about technology, I think about private markets as they've grown so much. It's where there is so much wealth creation opportunity and learning opportunity. And so, when I told people like, if we get this right, we're going to have a lot of people getting to be able to responsibly participate in a market that historically never, has been participated in, while getting exposure to things like the world of technologies, which is going to reshape our future. And so, we had a few people, we gained some momentum, and over time, we were able to build, an incredible team. So very blessed, as you know, company is just a sum of its people. And it is not about just coming into work every single day, but it's around creating something that, if you get it right, can be transformational, but seems unreasonable at the beginning. And so you have to have people that are unreasonable at their core DNA.
Yes, the unreasonable passion is such an amazing thing at a startup. But yeah, deeply appreciate you sharing that. Yeah, and as you're going into it, like startups are so unpredictable, as we're talking about, right? Like even when the vision is right, you have an excellent team. Have there been any surprises, interesting things you've learned as you've gone down this path journey about the team, the company, yourself?
So there's so much you learn. People that, advise startups that have never been a part of a startup, you just don't know. And I took a lot of things for granted. I got to work with some great, CEOs over time when I was at Silicon Valley Bank. I was lending to these companies. So I worked with companies like Roku and LinkedIn when they first started. And from the outside, things always look great. Like things are up and to the right. When you actually get in, there's a lot of grime. You are doing things that you didn't think you would have to do, but you have to do. And there's so much complexity as you grow bigger. So there's human beings are human beings, right? You have to think about putting people in the right places, motivating people. Things take longer than you expect them. You have to have a certain level of resilience, because you're going to get punched in the face, because no matter how great your plan is, your product is, it's still very difficult. And so everyone told me that it was difficult, to run a company. I think it's probably been 10x that. And for people that have kids, like the best analogy that people have said is like, when I have kids, like the highs are 10x higher, the lows are 10x lower. That's what it is to run a startup. And there's a certain obsession you have as a founder. It is very lonely because every waking moment you're thinking about this. Even, when I'm out to dinner with my wife, like I can see my mind start to wander of like, what's next? How do we solve for X? So you're constantly in this firefighting problem solving mode. And a lot of people don't understand that every single day you are going through these things that feel like all you're doing is putting out fires and extinguishing things. And that I think is probably the biggest learning. I probably underestimated that piece of it. But I will say that the highs have been that much higher. The ability to build and see the transformation we're making, not only for clients, but even for the people that are working to see, hey, all the hard work they're putting is actually going towards something useful, is something that I wouldn't trade for the world.
I mean, that resonates so much with me. I cannot even tell you, right? If I was in the room, I'd be hugging you right now because it's like, you're telling my story.
It's the commiseration. Like we're all in the same boat.
We're all on the same line. It's really good. I want to go a little bit deeper into you as a person. I think, you talked about the transition and why you made it from an intellectual perspective. But one of the things that we like to cover in Live Long and Prosper is how did you think about that vision from sort of the bigger picture of like your career you've talked about, but your personal life and the trade-offs that could come in personal life, as well as finances? Because typically all these things come together when someone's thinking of a major critical change in their life. So how did you go about it? How do you think about it? How do you sort of get the right help, advice, whatever it is, for that big transition you made from, very successful banker into, very successful entrepreneur, but very different line.
It's funny because I've made two major career transitions in my life. So one was leaving Silicon Valley Bank after 13 years. And by the way, when I left, I'd met my wife at Silicon Valley Bank. She still works there now, division of First Citizens. And so in 2012, when I left, I was leaving all my friends. It was where I grew up. And I thought I was going to end my career at Silicon Valley Bank. But I had this opportunity to take on a pretty big role in kind of building something from scratch. And that kind of scratched my itch to want to build, but in a structured way where it was an organization where I wasn't starting from scratch. So that was a big thing. And economically at the time, I actually didn't have a lot of money. And I actually took a pay cut to join the new organization. But my view has always been formed around like long term. So think of yourself as an organization. And, at that time, I was in my, mid 30s. And ultimately, one of the things that I thought about is I'm not looking to optimize my financial success in the short term. It's more long term. And how do I do that in the most nonlinear way? And that's by putting myself in positions that force me outside of a comfort zone and require me to build a certain skill set and a network that can provide these nonlinear outcomes. So I did that once for First Republic. It was a great sort of move. I was the first employee as part of the group, built it over 50 people over time. And then when I went through this transition in 2021, it was actually easier, believe it or not, going from First Republic to starting Allocate. And I think it was two reasons. So number one, financially, I was in a good shape. Number one, made enough money where my relationship with the money is like, is it enough to sustain me and have my family comfortable, my lifestyle, which is pretty modest as it is. And the second thing is, really understanding that, taking risk is something that, kind of creates nonlinearity in your overall life. And so it was actually not a very difficult thing to do for me the second time around. And I've always been formed by like, what do I want to leave this earth and what type of impact, I want to make. So I kind of looked at my career in three sort of, phases. Phase one was just learning to be a professional, learning about the business. Phase two was expanding my skill set and my network to be able to do phase three, which is work on interesting things to create a future I believe in. And so that's kind of how I got to the place of leaving First Republic, which is a very cushy job, took a massive pay cut. Um, it's embarrassing how much of a pay cut I took. But at that point, it was less about the monetarily because it doesn't actually make sense economically. I could it never does, right? Because the probability of any startup actually becoming a unicorn or beyond that is very low. But making the prospect of making an impact and actually creating a company around this future you believe in is actually incredibly fulfilling and interesting. And so it was actually easier the second time than the first time.
Super interesting. Did you sort of cultivate people around you as you were going through this journey, or were there like advisors, mentors, friends who you turned to help? I mean, it was easier, but or even actually when you went from Silicon Valley to First Republic, like, what were the what were the sources of advice and inspiration you drew from? And it's okay if you said there was none. I was like, I'm self-sufficient.
So I never had like and I know some people have like their personal advisory boards of, people that they go to. I think I had a lot of relationships where I was able to bounce ideas. The person that for sure has defined me and has helped me, kind of through these inflection points is my father. So my father, first generation immigrant from India. I was born in Canada, and when I was 8 years old, he made me listen to tapes, these business tapes, and it was not just business or like how do you run a business, but the type of DNA that you need to have to succeed in life. So it was around persistence, humility. And I used to hate it back then because I'm like, why are you making me listen to the tapes? And then he started taking me to business trips with him where we'd be up at 7 a.m. to 10 p.m. But what he didn't know at the time is all of those things started to ingrain and embed in my own, DNA and the way I thought about things. So throughout my life, my dad has been probably the most important guiding force, and even to this day, I mean, my dad's 77 now. My mom passed away when she was 63. But many of those inflection points, he was there and he guided me in a direction that had he not, I would have been in a very different place. And so when I left SVB, when I left First Republic, not only was he supportive, but he was helpful in helping me think through in a non-emotional way. I mean, in 2003, I almost left SVB because I was, kind of only child. Everything was given. I thought everything just revolved around me, and I wasn't getting the promotion. And he's like, what's going to define your life is not how you handle success, but how you handle adversity. And if you can't handle this, you're never going to make it. And I had written up my resignation on a Friday. I tore it up after that. That was a Saturday. We took a walk, and I tore it up, and it totally changed the trajectory of my career. And so sometimes it's somebody that's the closest to you that drives. And to this day, I see somebody that immigrated from India that beyond all odds created his own real estate company, became successful, laid the foundation for me. And for that, I'm forever grateful.
What an inspiring story. Thank you for sharing that so openly. Um, how did you develop? You talked a little bit about your relationship with money, right? And how, the way you think about it enables you to do a lot of that stuff. How did you develop your first view of money and how you think about it? And, what's your philosophy around it?
Well, It's changed a lot over the last 15 years. So, if you asked me 15, 20 years, it was, you know, generally focused around two things. One is, could I go out and buy, really interesting things like houses and cars? And, could you keep up with other people in your vicinity? Because in Silicon Valley, there is a lot of that of this person has this huge house in Atherton. Can I match it? And that's who I want to be. The second is it becomes a scorecard, right? It becomes a scorecard. The more you have, the more power you have. And over time, I think it's changed. I think it's more how does it sustain, this healthy lifestyle, and how does it reduce my stress levels? At the end of the day, to me, money is one of those things that if I can live a life that doesn't is not where money's not for providing my stress, and money can provide stress in two ways. Either you don't have enough money and you stress, can you pay the bills? Can you buy a house? Can you live in a certain area? Can you send your kids to school? And the other one is you have too much money, it becomes the only thing you become obsessed about. And so my, sort of background as Gujarati and Jain, it's less about the material things. It's just can you form a relationship with money where it doesn't actually control you? And so the way I kind of view it and my wife views it is we have enough money to live a healthy life. We can pay our bills. We can put food on the table. We have more than enough to take vacations when we need it. And that is really what's important over a long period of time. I think we want to accrue enough wealth to be able to do something impactful. We don't have kids. I think I mentioned to you before this call, and we don't plan to have kids. And so, what else can we do with that money that is impactful for other people? That is like how we think about money, but it also allows you to make certain decisions. So, me leaving First Republic to join and start Allocate and take this huge pay cut couldn't have been done if we didn't have really the foundation of enough savings to be able to make those decisions. So to me, money is about flexibility and not having it be a controlling factor over you.
That's fascinating. How do you and your wife, if you don't mind my getting a little bit
Yeah.
personal, because again, finances are once you're partnered, it's a joint thing.
Yeah.
How have you developed your philosophy together? How do you actually talk about it? Are there mechanisms or tools you use to, I don't mean technical tools, but processes you use to sort of align what your view and goal of money is with each other?
I think it helped that we both came from households that were very frugal and, actually were pretty humble. So my dad still lives in the house that he lived he bought in 1984. Um, my wife's parents, my in-laws, were actually, here for Thanksgiving last week. And, they were still thinking, and they have plenty of money to be able to afford these things, but like, they were thinking about, should we buy this, like, or, rent this bigger room versus a smaller room? It was like a $300 difference per night. They're like, I don't know if we need it. And so both of us came from the same sort of background where like we're pretty aligned in how we think about things, which is, we want money to afford us flexibility to do things in our career, to afford us the flexibility to when we need a mental breather to be able to take a vacation. If my wife needs something on the medical side or I need something on the medical side, we can afford it, right? We can do these things. But outside of that, we don't really talk about money very much. And it's because of this foundational belief that we don't want it to control you. I've seen other people be controlled by money, no matter how much money they have. Now, we are very tactical when it comes to investing. I'm 35% of my portfolio is privates. I'm an investor in 75 funds, maybe 40 companies. So I've done a lot because I enjoy it, but it's less about, is this going to make me X amount over time? Yes, I want to make a great economic return, but it doesn't really control my day-to-day mental health.
It's good to know. You briefly talked about your personal way you invest and things like that. Would you be open to talking about how you created your portfolio? Because
Yeah.
you're obviously someone who's done this professionally.
Yeah. So number one, I made a lot of mistakes early. And, like a lot of people, when you think about investing and, I think about equities and I think about income producing, historically it was very simple. It was real estate, it was public equities, and it was fixed income. And then over time, you realize that, as markets change, you can't just be in those, those different asset classes, especially after the global financial crisis, the bond market, there was no yields to be had. So you had to find ways to generate yield. I've generally been risk averse, which is hard to believe given, some of the things that I've done. But, early on, it was very risk off stuff. It was putting money in bonds. And then over time, I opportunistically started investing in privates. And the goal that we had was, over time, we're going to get to 35 to 40% in private markets. It took us about
But that's
11
pretty
years.
risk on. That side is pretty risk on.
Some of it, some of it. So it's not all venture. So when I think about private markets, I'm also thinking about things like private credit, senior secured. It was alternative publics, like different type of publics that were, maybe I should say private, say alternatives. It was real estate funds. It was GP staking funds. It was things that were what I would consider fairly beta exposure in terms of providing, decent yields, but I wasn't going to lose my money. I wasn't going to get a 10x. And then we started infusing it with some level of risk over time. For a while, I couldn't do venture capital because I was, and it conflicted out because of the organizations I worked with. You can't do it. But over time, I became more comfortable with doing things like growth equity, and now I do a lot of venture because I can do it, and it's an area that I believe in. But it is something that you have to think very critically about, and it's very personal. So the one size fits all doesn't make sense. Like my risk profile, my need for liquidity, my return expectations are going to be very different than you. And so, after about 5 years, I really started to think more structurally about all of those things and then starting to construct a portfolio that was how much do I want in alternatives? How much do I want in these different asset classes to reduce the amount of volatility that I take, but yet still optimize for the hurdle rate that I want to get from a return standpoint. And the reality is, even a few hundred basis points over long periods of time make tremendous differences. Like if you think about 6% increase in your return over a 12-year span, that's almost a doubling of your asset base. So I've gotten smarter with money over the last 10 years, and that's a lot of what's driven the models that we build right now, which is very personalized to the end investor. Um, so I'd say people generally make, and investors in general are very emotional creatures. So there's the concept of animal spirits of, like we can produce market outcomes based on emotional beliefs. And in private markets, unfortunately, people have done that where it's been very opportunistic. People tend to go in when the markets are hotter because of the fear of missing out. And when markets regress, there's that trough of disillusionment when people start to avoid it. So consistency, structured approaches really help people responsibly participate. And so I've learned that over time, but it took me 10 years.
Samir, thanks a lot for sharing that. I think I just sort of pick up from that and maybe turn a little bit back towards the mission and the company you're building. In many ways, you and I share and Arda share a similar mission, Arda and Allocate, which is about trying to use technology to democratize access in many ways. I want to talk a little bit about sort of where you see the overall world of wealth and finance heading. And in the past, you and I have discussed this concept of hyper personalization and stuff like that. So if you could maybe zoom out a little bit and talk a little bit about the overall direction that you see industry heading in with tech and finance.
So when we think about the wealth advisor business, so thinking about, taking somebody's private wealth and doing something with it, providing an outcome of some type, could be tangible, intangible. The world is changing very, very quickly, and some of it is happening, real time, and some of this is just things that have been compounding over time. So we talked a little bit about this before we started the show. Right now, private markets are big, right? So 13 trillion plus, expected to more than double over the next 7 years. That's not stopping, and companies are not going to go public quicker. We're going to continue to see this protracting time from, companies starting to having some kind of liquidity event. So more capital going into the private markets. What is also happening is that we're seeing the biggest generational wealth transfer of all time. So money is going from baby boomers to Gen X to millennials. And in fact, a lot of the wealth now is actually controlled by those two generations. Well, the way we think about wealth, our relationship with money, what we desire from somebody that we're working with is very different than, my father, for example, very risk off, keep it simple. I get on the phone, I walk into a branch. We're moving into an age where, number one, things have to be tailored to the individual. This whole one size fits all, I think, is gone. And I think now we have the technology means, given the data that we have now on individuals, the funds, the portfolios, applying intelligence for the very first time. We have access to intelligence in a way that we've never had. So the issue with personalization in the past, it was difficult to scale because it became a human resource issue. Like, how many clients can I handle? Today, all the data is there to drive the intelligence. So one person, and I think there will be a $10 billion RAA with 4 advisors, but we'll create better NPS because it's digital, it's hyper personalized. And in today's world, all of us are used to hyper personalization. When we go into Netflix, This is for you. Amazon, for you. When I go into any consumer, like it personalizes based on who I am. This is what we expect now. And so the wealth management industry or private wealth as a, foundation, whether it's tax planning, whether it's, the investment management, whether it's estate, all of this is going to be hyper personalized. And the net benefit of that is now the people that are going to have access to these services are not going to be just the people that have 50 million in worth. They're going to be everyday people that can now leverage the technology and get the same type of service and the same type of outcomes. And that's what I'm really excited. Now we're very early in all of this. Like the wealth transfer we're like right in the midst of it. This is the next 20 years. The digital nature of and the use of data and artificial intelligence very early. Full democratization of products still very early. The growth of private markets and even public markets in terms of continuing to evolve very early. The next 10 years though will be the biggest shift that we've ever seen in the private wealth market. And this is one of the things that I feel the most clarity on because I see it every day. And you and I talk to so many people and we see it on the ground. But that is kind of where I see the future. And I think a lot of the folks that don't adopt, they're going to die. A lot of these that's why we're seeing consolidation, not growth, not organic growth in the wealth advisory, because they continue to do things in a way that appeal to the consumer of 20 years ago, but not the consumer of tomorrow.
Absolutely. It's amazing. You basically told our story. Like that's the world we're trying to build with this like portfolio of one for every single person, right? Like where it's unique, it's hyper tailored to exactly what you want, and you can operate at scale at low cost. So super exciting. So to close off, I wanted to ask you three lightning questions, right? These are fill in the blanks. So I'll say the statement and then just whatever comes to your mind to complete it. So ready?
Let's go.
Okay. If you want to prosper, never underestimate the power of dash.
Grit and tenacity. And so many people I think feel like you have to be the smartest person in the room or you have to be the most well connected. But what I have always looked at are people that have extreme chips on their shoulder for whatever reason, because they've been underestimated. And no matter what, they're going to do whatever it takes to be successful. And I saw that firsthand with my father. Like he had no business doing what he did. And that's like what's made me successful. No one will outwork me or out hustle me.
Beautiful. The three key ingredients for a long, fulfilling life are dash, dash, and dash.
That's a great question. And there's so many things you could pick from. The things that I would identify with, for that particular question, number one is health. Without health, there's nothing. And, I mentioned my mom passed away. She passed away very early. And I saw how fragile it is and what happens if you don't have health. You can't help other people. You can't help yourself. The second thing is a sense of purpose. Like what are you here for? And what are you looking to create? And I think without any type of purpose, it's really hard to have fulfillment. And the final thing is, I think you have to have insatiable curiosity. We all have to be in this learning mode. And I think for me, like fulfillment is always like learning new things every single day and it, I think comes from sort of this sense of having enough humility and self-awareness to know that you don't know everything and that every day is this opportunity to learn more. And so those are the three things that kind of, for me, that bring the fulfillment.
Beautiful. Health, passion, purpose, and curiosity. Beautiful. Last question. The simple joy that adds years to my life is?
So I'm big into fitness. I played sports growing up and every single day I will try to at least get 30 minutes to an hour of some active time. Now that could be a walk. I could go for a walk. And sometimes I will walk and I won't even put a podcast on. I'll just walk and think. And those type of things have added so much, I think, perspective. And it allows me to uncloud my mind from like the daily nonstop tactical context switching. And so whether it's a workout, whether it's playing sports, whether it's a walk, those things, despite the fact that they're hard when you are running a company, it is such a enablement for happiness because you just feel better. You feel better. You're more clear and lucid. So I think that, just exercise in general of sometime every single day has just helped me so much. And yes, the health effects, you should add years to your life because you're more physically fit.
Yeah. It's literally adding years to your life. That's wonderful. Samir, it's been such a pleasure talking to you. Thank you so much for being on Live Long and Prosper.
Thank you. Thank you for having me, and congratulations on all that you built, and excited about our continued partnership.
Thank you so much.